Good morning, everybody. It's Thursday, December 14th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the chat area, and we'll get to those during the show. Real quickly, overnight markets had March corn up 3.5 at 483. January soybeans were up 5 at 1312.5, and March Chicago wheat was up 8 at 613.25. Export sales out this morning. 1.4 million for corn. That was on the top end of the estimates. So a solid showing for corn. Beans were a little over 1 million. That was as expected, in line with the estimates. Wheat was 1.4, almost 1.5 million, which would have been towards the top end of the estimates for that complex. We also had a daily export sales announcement this morning, 400,000 soybeans to unknown for 23. Lots been going on here, guys. So wanted to get it over to Dustin here this morning. I know we're still paring back the onion here in Argentina. New announcements and new rumors, facts, a lot of stuff going on there. But what's your thoughts here this morning, Dust, as we get rolling?
Yeah, thanks, Dan. Export sales were kind of on the low end for beans, but then again, we got the 8 a.m. sale announcement that 400,000 is a pretty big number for one day. Interesting to see, corn on the high end, beans pretty good, or wheat pretty good, and China was in for some corn switching from unknown destination as well. So overall, I think the big question for carryout for some of these products outside of discovering final yield in January is going to be on the export front, especially. We've got really good crush right now. It's just how much is the rest of the world going to take from us, and what are we going to be left with for tightness? So I think that was you could see a slight uptick here, and when you relate that to also this Argentine story, where at the moment there's some confusion. I guess the export register is not reopened yet, what the rumors are, and there's also rumors that they might be implementing a 15% export tariff on corn and wheat. But
Dustin, talk through what that first part of your statement meant. What does that mean to the farmer?
It would be supportive, right? If the Argentine exports were closed due to the expected currency change, they're still they still haven't reopened them yet. Maybe there's some more uncertainty about what that means, right? Are they gonna? Is it around this tariff? Is the tariff going to, this 15% tariff, is that going to be implemented for corn and wheat? So that might be another driving factor for why we were higher overnight. It's just that the uncertainty of what that, maybe some exports shift our way in the process.
Yeah, well, to that point, wheat and corn are already 12%. Let's put that in perspective. So they're talking about raising it 3%.
Yeah.
Right. So I mean, it's not a new 15% thing. It's raising it 3%. And soybean complex was supposedly not going to be affected or changed. I think that the disappointment was that they kind of expected it to just be removed, I think, altogether. So, I think going from he's going to remove all of it to actually he's going to raise corn and wheat, that's probably more of a depressing thing in the short run. And I think we talked about yesterday, he's been in office for a week, right? So these are all dramatic moves. It's going to take time. I mean, we talked about this yesterday on the knee-jerk reaction down. I mean, I think it's really positive for them, medium to long term for sure. It just takes time to move something that's been so derelict for decades.
Yes,
in my opinion. So
by all estimations, I mean, is this guy is he obviously got elected, but I mean, is there any overthrow possibilities down there? I mean, I know it's kind of a wild west a little bit, but I mean, is this a shock system that could really get really wild? I mean, you know what I'm saying?
Well, I think that let everybody else. I'm not by far not an Argentine expert, so I don't want to. But I also, from doing a lot of reading on it, he doesn't have full support, right? He's got a lot of opposing parties that can overrule what some of these changes that he's trying to make, and he's definitely got a strong headwind, right? Yeah. So the intention's great, and everything that he wants to do is great. It'd be interesting to see if he can actually get it done with, it's like going and trying to change Chicago tomorrow. I mean, it's you got a lot of stuff to
Come on down.
You're said than done. So
yeah, that's no kidding.
The other thing too, overnight, we had that rate, was left unchanged through the FOMC meeting right now, but the Fed's guidance, their dot plots showed, a bigger cut coming in the next year than what was previously shown. So the market found that to be very favorable for dollar-denominated assets. Stocks went to new highs here. The Dow went to new highs. But the dollar index has gotten hit pretty hard following that report. We only had 15 minutes of trade yesterday to kind of price that into what that means for grains. And then overnight markets also kind of came out of the gate pretty strong, probably following that weaker dollar. We again have another sharp drop in the dollar today, coming into the day, another rise in other dollar-denominated assets. So there's another tailwind there potentially for grains. So hopefully that gives us some opportunities here going into January to get some more look at 24 hedging.
Absolutely.
Crude's also up 3% today as well. So energies are railing as well.
And
yeah, interesting. So someone put out yesterday, it was actually a good chart. I'll have to try to find it. We may put it on tomorrow, but showed how many stocks are above their 200-day moving average. And then they also showed how many commodities are below their 200-day. And it was like, it was a clear rotation out of commodities into equities over the last couple months. So I think that's been, the equity or, the inflation. I think this all goes into, rate hikes and the bigger, macro picture here. But I think the big players are kind of betting on inflation coming down, equities going up. So I think there's been a big rotation of money. All the commodity indexes have really struggled. They're all below their moving averages. So, it's interesting. You have a lot of different tail and headwinds, I think, kind of going on right now, in my opinion.
And thin markets, holidays. I mean, we talked about this the other day in the war room, and it's you get less participation, and now you've got geopolitical stuff that's come to the forefront. You've got a stock market making all-time highs going into the new year. It's no rest for the weary, right? I mean, it's not just look away from it. This stuff's going to be crazy. Ben, what's going on in the East?
Harvest all but wrapped up. There might be a very small straggling group of still harvesting. Basis has firmed a fair amount from our harvest lows. I don't think that you have to overthink that part of it. If we go lower, basis will probably improve. If we go higher, I would think that it would get soft. There's a lot of grain here to move. When we look at going back to the commodity question, I just wanted to add in that looking at them individually, should we see a shift in people trying to get out of their short commodity position? If you look at them individually, wheat still is very vulnerable because of the percentage of short that's in the contract as an open interest, and that would be interesting to see. But a lot of this is automated in nature, and all it takes is violation of certain levels, and they'll want to start exiting. So, and corn, on the other hand, still has a very fundamentally bearish outlook until something changes, and I think that the grower will be there to engage. Whether it's $4.95, $5, $5.10, I think that they will be there to engage, and there's still a lot of corn that needs to be priced. And the December contract expires today, so there's still 170,000, 150,000, whatever number you want to call it, in corn is not a tremendously large short. So I think that we have to keep that in perspective, and to see if the rising tide lifts all boats and we get to benefit from that. So
you speak on boats, Dustin. I was going to ask you. Hadn't heard any chirping on water levels. Have you been looking at that? Have we gotten any improvement, or are we still struggling down in the Gulf?
Yeah, I think the main concern is going to still be the Baltic dry index going up so sharply in recent weeks in the Panama Canal. So even if the Mississippi is improved a little bit, it's still an issue down that line. So total cost of transportation is up, is going to hurt both buyers and sellers. And I think that is a headwind for us still.
So I have seen that kind of talking about a lot of headwinds and tailwinds, but Brazilian corn prices have been sharply rising, over the past month or two. So they've been going up sharply. China made 2-year lows, I think, yesterday or the day before. So there's just a lot of things. I think that's probably kind of explains some of the corn action. It's kind of just stuck here right now, right? I think the market's kind of waiting for something to change. Every time something improves, a different thing kind of gets worse. So unfortunately, that's, there's not a lot of stars. There's not a lot of things lining up in one direction or the other to make it a really clear path from what I'm saying.
The next thing you got January report, right?
Yeah. And, I mean, unless it's a major shocker, I think we're kind of fine tuning what the yield is, in my opinion. I mean, maybe come up with a big surprise. I don't think it'll be a big surprise down from what we've seen. You might see another bump in yield, but the fact is, like, if we can find demand at these levels or not, to Ben's point, December's corn's gonna go off at 460, and you're gonna be looking at 485 March corn. So that's the tough part of these big carry markets, is when the cheaper one goes off, and that's kind of where the next one tends to drift. I hope we change that. Here, but that's kind of the trend.
Yeah. I wonder too, kind of looking at the bigger picture of one of the things that could alter the fundamental situation for corn is China buying it. And as they make new 2-year lows, at what point do we meet them? Because we need the price for that business, but they're claiming that they have a record crop. And at the same time, with low river levels, what is our capacity to execute that, even if they want to purchase a lot of corn? So I think corn's just kind of stuck here until it violates some moving averages, has some things that change. Certainly a greater commodity bid would be great to see. We have rebalancing coming up. So it goes back to just being a chop market until we see otherwise.
Ryland, real quick here, got a couple of minutes. Just wanted to see, I know we had, kind of a nice little winning streak in the livestock markets. What are we looking for today?
Yeah, we snapped that winning streak yesterday, Dan. Generally speaking, there just wasn't enough follow through to really kind of keep the price level supported. I feel like this macro change, or at least a little bit more confidence in the dovish Fed numbers yesterday, may kind of bleed a little bit into the cattle market over time. This big break really has been led by the funds liquidation, and now there could be if the commodity story starts to unfold a little bit better, you get a big break in the dollar. I mean, time frame, of course, is going to be something debatable, but maybe that does lead to a little bit better support lately. Cash right now is still pretty weak. 167 in Kansas yesterday, 168 in the South before that. So waiting for the bulk to go. But as of right now, there's not been any real change in the cash direction or the beef direction. It just still kind of looks like liquidation on the live side. We had open interest down another 689 contracts. And open interest was up in the feeders, and we know the funds are still leaning to the short side on feeders. So, just the poor close kind of reinforces that maybe the selling isn't done yet.
Okay. Still strong LRP opportunities for guys out forward as you're looking at indicators?
Yeah, I think you kind of have to now, because if we're starting to get back to a more, if these elevated levels start to drift a lot lower, $20, $30 lower, something like that in the next 6 months, you're going to want to make sure you've got your bottom line covered. Absolutely. I mean, I would be looking at them pretty much every day after 4 o'clock, looking at that anywhere from 90 to 95% coverage on pretty much as you can, any production time frame you can.
Very good. Coming into the open here, guys, any parting shots as we start out the day here today?
I was just gonna make one more comment, and kind of more from a trader's perspective, but one thing we'd always say is, like, December can ruin your year. It rarely makes it. And just to kind of keep in mind, there's a lot of things moving around, but we're just in that kind of post-harvest, trying to carve out some kind of a low, figure out where we can kind of bottom here. Doesn't mean we go up, but we talked about this yesterday, after the close, I think, just, and it's, kind of just reminded of like what seasonals are. We typically make a low in December and kind of try to grind somehow back going into the spring, so not try to oversimplify it, but I think that's kind of in this, we try to make things happen in December, and usually it's a mistake. And I think that you kind of see these moves of people trying to get beans to really run up, and then they try to get them to break and make new lows, and it's really just a chop because that's just kind of the time of year we're in. So I wish there was a glamorous story one way or the other, but I just don't see it.
Yeah, that's a really good point there, Justin. We just came into the open. March corn's up 4.5, 483 3/4. January beans are up 9 1/4 at 13.17, and March Chicago wheat's up 11.5 here at 615 3/4. Streaming every day, folks, on Facebook Live, X, and YouTube. We appreciate everybody tuning in this morning. We'll be back again tomorrow morning, 8:15 Central Time, and we hope everybody has a great day. Thanks.
Thanks,
Dan.